The second adjustment says a debtor returned defective or damaged goods stock with a selling price of 15,000. Markup is 50%. This markup will help you to calculate your cost of sales. When you see markup, you must think cost of sales, right? The stock was then returned to the suppliers, but no entry has been made for this. Now, when a debtor returns goods, what happens? It means our sales must decrease. Ne? A debtor returned goods that were sold to him, therefore the sales are going to decrease. Therefore, in our income statement, we are going to say sales minus. I'm going to decrease sales with 15,000. But remember also, we have skipped something here. We have skipped the debtor's allowance. Debtor's allowance is the goods that were returned during the year. Debtor's allowance is the goods that were returned during the year. And then to this amount, we are also going to have, right, what have I done here? I have goods that were returned during the year and recorded, and I have goods that were returned but not recorded. Therefore, the total value of goods that were returned for the whole year would be how much? 85,000. I hope that is okay with you. This is the total value of goods that were sold, that were returned. These were returned during the year and recorded. These were returned but not recorded. Therefore, the total value of goods that were returned is 85,000. But now with this of 15,000, because they were returned, we must also decrease the cost of sales because this was not recorded. And how are we going to get the amount of the cost of sales? We go back to our adjustment. We take the 15,000. We want to calculate the cost price. We multiply by 100 over 150. Then you see, because this is 100 plus the 50. That is why we have 150. Because this 15,000 is your cost price plus cost price. Your cost price plus gross profit, right? Now, you have 15,000 multiply by 100 divide by 150. Now, the cost price of the goods sold was 10,000. Therefore, our cost of sales is also going to decrease. Our cost of sales is going to decrease with 10,000. But very importantly, they said the stock was returned to suppliers. The stock was returned to suppliers. Now, we go to our note for trade and other payables. Remember, when we buy goods on credit, where is our creditors? There we are. We have creditors control. Under our trade and other payables, you will have your creditors control. You open brackets. How much did we owe creditors? We owe them 786,800. 786,800. Now, when we return goods, the amount that we owe to them decreases. The amount that we owe to them decreases. Therefore, we must subtract 10,000 from our trade creditors. Now, some of you may ask, what about trading stock? What will be the effect on the trading stock? Right. What will be the effect on the trading stock? Which is a good question indeed. Because they said goods that were sold were returned. But when you read this adjustment carefully, they say the stock was then returned to suppliers. What does that mean? It means when the customers return the stock, we added 10,000. But when we return the stock, we immediately subtracted 10,000, which actually means this cancels that. Because the customers return the stock to the business, which increased the amount of stock in the business, but the business returned them to the original suppliers, which means now that the stock decreases by 10,000. Therefore, the net effect is 0. Right. Let's continue. We are done for now with that transaction. At this stage, you can calculate your gross profit. At this stage, you can calculate your gross profit. You have your sales, which is 5,970,000, minus debtors allowances of 85,000. It gives you your sales of 5,885,000. Your cost of sales, you have 3,200,000 minus 10,000. It gives you your cost of sales of 3,190,000. Now, to calculate gross profit, you say sales minus cost of sales. Then you have 5,885,000 minus 3,190,000. Let me kill 1 0 here. It will give us 2,695,000. 2,695,000. Please, people, you must subtract cost of sales. Gross profit is sales minus cost of sales. Some of you normally make a silly mistake of adding the two amounts. You must subtract. That is why I always put this amount in brackets to know that I must do what? Subtract. But most importantly, again, this transaction or these adjustments also affect our debtors, because debtors return goods to the value of 15,000, which means what? Which means that in our debtors control, the debtors control, where is our debtors control? There it is. The debtors control is going to decrease with 15,000. Debtors is going to decrease with 16,000, because when debtors return goods, the amount of money that they owe does what? It goes down. It decreases. We go to the next adjustments. Adjustment number 3. A debtor, M. Spark, was declared insolvent. His estate paid 40 cents in the rent, which means for each 1 rent that he owed, we received 40 cents. 450 was already received and recorded, which means those 40 cents amounted to 450, which means we received 40% of the amount that he owed, and that 40% amounted to 450. They say was received and recorded. What do we need to do? They say write the rest of as irrecoverable. What is the rest? 60% of the money is irrecoverable. But the challenge here is that they have not given us the total amount of money that they owed. But we can use these two amounts to calculate how much he owed. Therefore, what are we going to do? We're going to say 450 multiply by 100 over 40. That will give us the original amount that he owed. 450 multiplied by 100 divided by 40. It means now that this person owed us 1,125. He owed us 1,125. Of this, how much did we receive? We received 450. Therefore, how much must we write off? we write off 1,125 minus 450, which means the amount that we must write off is 675. If you want to check, you can take 1,125 and multiply it by 60 over 100. 1,125 multiplied by 0.6, you'll see still gives you 675. It still gives you 675. Right. Now, this is a data we write off as a bad debt. Now we go to our income statement. We go to our income statement. We say our bad debts are going to increase by 675. But at the same time, our debtors are also going to decrease with 675. Like I said, each adjustment affects most adjustments affect both a balance sheet account and a nominal section account. The reason that I'm showing the effect on the debtors control is because later on you are going to need that account. You will see. I think it is adjustment number 4. We are done with adjustment number 3. We need to go to adjustment number 4. Adjustment number 4, they say, on 28 February 2014, 2,400 was received from J. Jones, whose account had previously been written off as irrecoverable. The amount was entered in the debtors control column in the cash receipts journal. Now, what mistake was made? They made the mistake by entering that amount in the debtors control column. Because when a debtor whose account has previously been written off comes back and pay, that amount is referred to as bad debts recovered. And you cannot record it in the debtors control because the debtor does no longer exist in your books. You took out that account when you wrote off the amount as irrecoverable. Therefore, in order to correct this mistake, what do? We are now going to record that amount in our income statement. Under income, we are going to say bad debts recovered. And then how much was recovered? Bad debts recovered. 2,400. Bad debts recovered. We then record 2,400. But again, remember when we recorded the amount, under debtors, it meant that we decreased the amount owed by debtors. When we recorded the amount under debtors control, we took it as a debtor paying his account and we decreased that amount of debtors control. Now, in order to correct that error, we are going to add back the 2,400. Now, let me repeat this thing, why I add back. When this debtor paid, they decreased the debtors control by mistake. Now, in order to correct that error, we add back the amount that was subtracted by mistake. That is all that I have done here.